All right, welcome to the next session of FTX 2021. Our next panel is called Keeping Up with the Regulations. As the popular saying goes, haters gonna hate, regulators gonna regulate. After doing an inordinate number of KYCs myself over the several years I have been using any financial products online, KYC, as we all know, stands for Kill Your Client Base. Last year, nearly all of my subscriptions broke because of a new RBI regulation. Now, I'm sure that happened to many of you, and for the most part, I was very happy because I realized I was subscribed to many things I had forgotten about. Now, subscription models obviously are the new way of doing business, so this is extremely crucial to everybody's business model and how things work. Very few products are now, especially software products, are just available for sale. Instead, they will slowly bleed you dry over the course of your life. But all of this is done by the RBI to protect consumers, and companies like Razorpay have come up with innovative products like Mandate HQ and Token HQ to ensure that there is no chaos amidst all the changes. Now, you can get more information on Token HQ and Mandate HQ and other Razorpay products by checking out the Experiences Center that we have. And now, without further ado, let's start our new panel. Now, let me please join me on introducing the panelists. Please put your hands together in your house and welcome Shekhar Bhandari, the President of Global Transaction Banking for Kotak Mahindra Bank, Anand Bajaj, CEO and founder, Pay Nearby, Sohini Rajola, Regional Head, APAC and Middle East for Western Union, Nalin Bansal, the Chief Relationship Management and Key Initiatives, who is in charge of all this for the NPCI. And once again, to moderate the second session of the day, Amitabh Tewary, the Chief Innovation Officer at Razorpay. Looking forward to the session. Thank you so much, guys. Please take it away.
Thank you, Anand.
Hello, everyone. Good afternoon and a warm welcome once again to all of you. I hope you've been enjoying all the sessions of FTX 2021 so far. And I promise you that the excitement is going to continue for the rest of the day today and tomorrow. Well, regulations is a hot topic of the day. We are all in the midst of a few regulations which are probably impacting a lot of lives, hopefully positively in the longer run. One is, of course, your recurring payment mandates, which Karan spoke about briefly. And there's another one which is on tokenization. The industry is racing to finish both of these regulatory mandates before the due deadline. But that sets the flavor of today's discussion on regulations. And I couldn't have possibly asked for a better panel than what I have here with me today. Shekhar is a banker with expertise across many areas of banking. Sohini, of course, comes with, she heads Western Union for APAC and has been a banker in her past life. So she comes with, subject matter expertise on cross-border and remittances. Anand, of course, having been a banker before, is now an entrepreneur, has been running his own enterprise, which works largely with micro SMEs and also in the bottom of the pyramid segment. And of course, we've got Nalin, who is representing NPCI, which is India's largest very own payment network, and therefore brings that vantage point view. So we will hear from all of our panelists. Let me set the ball rolling by first turning to Shekhar. And of course, that's a question that I'll also pose to the rest of the panelists on what, according to them, have been the most defining, most impactful regulations, any two, in the last decade, right, in your view? Shekhar.
Thank you, Amitabh. I generally would say that tech plus regulation is equal to innovation. And when I see you as a Chief Innovation Officer, I think that's the part that you have technology, understanding along with the regulation is when I think you can make innovation. Coming to your point that what are the two defining moments for me in the last decade, I'll just take the liberty to make it three. Very simply, I think the number one will be the identity rail. I call the Aadhaar. In India stack, I call the three rails, and three rails are the three innovations I think which stand. Aadhaar actually redefined the identity on demand without the need of a physical presence. And it facilitated eKYC, eSign, DigiLocker, and when you see each of these, I think they have been revolutionary in terms of having a biometric identity that requires minimal information. Second is the payment rail, I think, which got built on the identity, which was UPI, developed by NPCI in 2016, and regulated by RBI, but it is a single interoperable interface for bank accounts, 24/7, real time, I think enabled with the mobile to access the payment system. And with its VPA framework, it is able to actually have Aadhaar number, QR code, account number, bank IFSC code, mobile number. I think everything done. And the third one, which is very recent, I call the data sharing rail, which is started is the account aggregator framework. So identity rail, payment rail, and data sharing rail, I'll call are the three big parts which also form the entire India stack. And identity rail actually has brought a large population into the formal financial system now, where the payment rail has allowed only for continuous activation. And when the third rail of India stack allows individuals to access and share their personal data to overcome lack of trust, information asymmetries, I do feel that I think it is a big factor for the customers to support going forward. Countries around the world, I think, deal with the subject of data regulations in different ways, but I still will say that when individual is in command and is owning the data, that becomes the best way in which he or she decides whom to share and what to share. So those are my three parts, Amitabh.
Great insights, Shekhar. Let me turn to Anand now. Anand, any additional I would
Yes,
say, regulatory changes you'd like to mention here?
thank you. So, Bhandari brought out very well good points. The two differentiator regulations I would say is the zero MDR, low or no MDR, which was a mandate which drove digital payments in true sense and brought up a lot of visibility in the ecosystem. With digital payment, grew amazing amass GST in the country. It's a good nation building step that was taken, but a high time, I believe, to review. And I think today's announcement by Reserve Bank should positively go in that direction. Second, I would admit is the OTP on online transactions was a momentary dip, but that guided India into a secured transaction with chip and pin also brought in when the world over was laughing over India that nowhere it happens. India was standing tall and doing these things. So I think that has kept us in good direction on that.
Awesome. Sohini, your views on this?
Thank you, Amitabh. I think let me switch gears to the both Shekhar and Anand spoke about foundational capabilities. I think which are critical. Of course, India took that bold step, which has put us really forward and center of in terms of the payment innovations across the world. Like when I look at the entire Middle East APAC region, I think the example that I constantly quote anytime we are talking about payment innovation is about what's been happening in India. And yes, not all of that journey has been super smooth. There have been initial hiccups. There are all kinds of views, all the intermediaries or all the constituents who are making those regulations happen need to go through that entire initial journey to be able to make it really smooth. But let me switch gears and talk a little bit about the kind of regulations that are impacting cross-border money transfers. So and much of that is also built on some of these foundational capabilities like eKYC, what NPCI is doing, the whole UPI, which is of course one of the leading payment mechanisms world over. So when you talk about cross-border remittances, I think it's common knowledge that India is the largest receiver of cross-border remittances, and we have some fantastic regulation in place. One thing which really helped over a period of time was when under MTSS, money transfer operators were also permitted to be able to deposit money into bank accounts. And initially what happens with regulation is at the time when regulation is carved, there is a lot of time and energy that is spent into it, and it takes care of what is the requirement of the end consumer whom the regulator is obviously trying to protect the interests of, and what is the infrastructure around it. And basically this was meant only for the cash remittances, so it took some time, but I think it really helped because all the other stuff that happened with opening of the entire massive opening of bank accounts, you now were able to say, even if the remitter or the Indian, overseas Indian who went out, is working hard to send family remittance back home, even if they are paid in cash in the foreign currency, they want that to be deposited in a bank account. And it is so easy. It is real time. It is instant. And this was something which was enabled because of this regulation. I think, and so world over, if you look at it, it is really simple and very easy to be able to send money from any country. At Western Union, we do it from more than 200 countries and territories, in originating in more than 130 currencies, and we call it money in minutes. So basically, you can walk into any Western Union location or in any of the 75 countries where we have our digital apps, download there. You can pay in cash, pay in account, pull money from your wallet, from your account, and here, if the customer wants it, it's within minutes available both for cash and in the bank accounts. I think the other regulation, which is I think a good start, but needs a lot more work to be done, is when you try to send money out of India. And it's important because we come from, obviously, a time period of where inward dollars are welcome, but dollars moving out of the country is something which needs to be guarded very strongly. So under the LRS, when the limits were raised, it was still, from a process perspective, it was still very cumbersome. So you have the AD2s and you have the banks and you have the documentation. So clearly you can send money into India in minutes, and it's easier than even making a WhatsApp call to your loved ones. But if you were to try sending money out of India, it's a hugely cumbersome process requiring tons of time, effort, and documentation. um, and there are very limited players who are allowed to participate in that. So really, there is not much competition as well. One thing that RBI did was they allowed money transfer operators to participate and offer digital products in conjunction with existing banks. And that's how you see like the Woo.com and other offerings, where customers are now able to, even when, because this is rising shining India, right? It's not just about the Indian blue collar worker going out and sending money home. Today you have millions of Indians who are middle class and above, have global aspirations, would send money out. We've seen the data that is coming up. We saw a little blip in the COVID times, but again, Indians sending money out for education purposes, for other defined categories. It needs to be as simple as it is to get money in, and I think we've taken this first step with that regulation. So both I think very much in the positive direction from a cross-border remittance for India.
No, that's a really important point that you make there, Sohini. I mean, India is the world's largest inward remittance recipient market, and there are a large number of Indians living outside of the country and doing very well, as we all know. And they all send money back home, and therefore the laws, obviously the regulations there are what they are, and they are pretty conducive for business. But the point that you made, that taking money outside should also be relatively simple. Of course, there are some considerations that a developing country like India will always have for foreign exchange reserves. So we'll come to that in a bit, because cross-border is one important area where maybe future regulation impact is something that our audience would like to hear from all of you about. But let me now turn to Nalin. And Nalin, apart from getting your views on the most impactful regulation of the last decade, what I would also add, let me add one additional dimension to the response from you, which is the role of an entity like NPCI, right, which controls a large majority of India's retail payment ecosystem as well as B2B payment ecosystem, and runs most of the settlement systems. So what is the additional responsibility that an entity like NPCI carries while interacting or interfacing with the regulator, and what kind of role do you play? If you could also say something about that along with the impact.
Yeah. Okay. To the first part, I think Shekhar covered it very well. But I was thinking about it, and I think there is a distinction between policy, public policy, and regulation. Maybe there are things that have happened on the policy side, and then there are things happen on the regulatory side. Typically, the intervention on the regulatory side would focus on security, fraud management, customer convenience, and then all of that. And I think policy side kind of fosters a lot of innovation. And I think it is no big secret that on the policy side, clearly Aadhaar has enabled a lot of use cases out there. Whether it is on the payment side, APS, Anand will have a lot of good things to say about it. But I'm just saying that it has enabled a lot of payment use cases for a lot of us. Again, on the policy side, I think the opening up of Jan Dhan accounts, which kind of brought in a large set of segment in the banking side, I believe was a major step towards bringing in financial inclusion, and I think it opened up a lot of stuff for the operators and for the market participants. I also believe on the policy side there are things around KYC, the inclusion of CKYC, and the account aggregation model. So many things that have happened on that side. On the regulatory side specifically, I think there've been a lot of course, on the policy side has also been zero MDR. Some people can debate demonetization. I think did help digital payments to some extent, but I'm just saying that there've been a lot of activities there. But coming back on specifically regulatory interaction or intervention, I think there've been a lot of ideas and interventions there. Not many people talk about it, but the whole conversion of Max Stripe to EMV cards, I think was a huge activity for the entire industry. It took almost 3 years, and the good outcome of that is that there hasn't been a fraud on the physical payment side since that conversion has happened. While it had included, still till today ATMs are trying to convert to it, but I'm just trying to say that it has helped the industry so much more, that the frauds have come down, the fraud to sales ratios have come down significantly after EMV conversion, specifically in the ATM industry. So that was one, I believe. I also believe it was a pretty early intervention on ensuring that there is a second factor authentication for every transaction that we do. Everything we do on the payment side needs to follow the principle of two-factor authentication, what you have and what you know. And I think that is ensured, I think a lot of markets don't have it. That is ensured that we continue to have enough safeguards given the kind of population we serve, the diverse population we serve. And for that reason, I think the regulator has maintained that, and then it has certainly given all of us a lot of confidence to do a lot of other things, because we know that transactions are always second factor authenticated. And I think post that, the third thing I would say is in how I would say they have tried to position and bring in the non-banking segment into the ecosystem, right? I think they tried with the payment banks, and then of course with PPIs, and now how the PPIs are given a slightly more stake in the game, right? They've increased the limits. They can now do cash outs. They are going to be fully interoperable. They were not fully interoperable earlier. Of course, with the KYC, compliance being there, but just saying that, I think that's a fantastic way to bring innovation through regulation, like Shekhar said, and drive a little bit, in terms of non-banking, to try and bring more payment use cases. So I think these are some few things that I've seen from a network point of view. And we continue to do that. You spoke about card on file tokenization, you spoke about how recurring mandates need to be now done in a certain fashion. So I think all of that is continuing and will continue as we move along. So I think these are all good things. Coming back to your other question, Amitabh, I think as a network, it puts a lot of responsibility specifically for payment systems that we manage pretty much on a standalone basis, whether it is check truncation systems or it is the NFS network, which is the ATM network, the NACH platform. We pretty much managing all single-handedly in this country, and I think it drives. It kind of puts a lot of responsibility onto us, that many of these regulatory mandates or policy interventions impact how these payment systems get, or the participants to these payment platforms, prepare themselves, right? So the entire operationalization of these mandates, of these regulatory intervention, then happens via NPCI and NPCI's interaction with the market. So sometimes, the market obviously confuses us as a quasi regulator, but really we are just implementing the mandates which have been, given for the market to adopt. So it's a lot of responsibility, to answer your question. And I think we are just trying to bridge. So we end up being the bridge to the market and the policy, making body or the regulatory body, to ensure that what is expected and what is there in the market, we are able to match that up. So that's
Great.
the role.
Some great insights from all of you, and that nicely set the stage, I think. Let's change tracks a little bit. So if you talk about the banking regulator, which is the Reserve Bank of India, they have a pretty organized set way of going about policy formation, etc., apart from the regular work of controlling and regulating the monetary policy. So there are vision documents that they publish. They have a consultative approach. They reach out to different stakeholders, general public, experts, right? My question sort of branches from there, and this is to Anand, because I'm aware that he was right in the forefront or in the center of what eventually became the standard norm for domestic money transfer, channels. The creation of that is an interesting story, and I would request Anand to use that example to tell all of us and our audiences how proactive engagement with the regulator can actually drive seminal innovation which has far-reaching impact, right? If you believe in an opportunity, if you feel that you are trying to solve a problem in a nice, innovative manner, even though there may be pushback or even though there may be questions, eventually if you stay on track and if you engage proactively with the regulator, then you're able to create magic, right? So Anand, if you could use that example to tell us more about it.
No, fair, actually, and very good reminder. And I must call out early on that we are operating in a country with the best of the regulator at this moment, where a regulator calls upon a regulatory review board to ask people to give opinion about their own guidelines. This is fantastic. It doesn't happen elsewhere. I would say the setting up of a CDDP, the Committee for Deepening of Digital Payments under Nandan Nilekani Sahab, was a great next first step. The cross-border remittance, where we are working as Pay Nearby with 6.5 lakh retail touch points under the RBI's sandbox, is a great leap of faith that the regulator themselves have come up with to harness innovation and leave aside the innovation hub set up under Mr. Rajesh Bansal at the helm. This carves out very clearly that while people used to say regulation will lead innovation, here we are in an environment where regulator is actually coming ahead and facilitating innovation. That said, I think you rightly called out, Amitabh, that if there is a good thing to be done with extent guidelines, and if you are able to orchestrate to bring out a circular, which we call a certificate, is what a regulator does fantastically. For the cross-border remittance, for example, domestic remittance that you called out, when we were in the bank, we integrated the NEFT pipes to a banking correspondent and facilitated low-ticket remittances. And sooner, the 5th October 2011 guideline came, the circular came, we call it a certificate that followed the work on the ground. So it's a brilliant environment. I think fearlessly, if you can do good modules and bring out for the mass market using India stack, not using India stack, the whole endeavor of taking high end of technology to the bottom of the pyramid is being appreciated by the regulator, and that is what we are at Pay Nearby committed to.
Brilliant. So if we were to stay on the topic of bottom-up pyramid, and I would also invite my other panelists to contribute their views on this. But if you were to stay on that piece for a bit more, Anand, what do you think are the major bottlenecks that still exist? And we obviously have to be aware that there are challenges related to infrastructure, telecom infrastructure, what you have, customer awareness is also low, etc. So keeping all of that in mind, if digitization, inclusion, some of these things were to really spread out, what do you think could be done by way of regulation? Do you think everything that could have been done has been done, and there's no silver bullet, or there's no major challenge to be solved?
You're asking me, Amitabh?
I'm asking you, and then of course I'm
Okay,
opening this up to the other panelists as well.
So I think what one could do good is that after writing a regulation, one should also elucidate it with an example written in English, because people have their own versions of understanding of the regulation. For very basic example, the work that we do, there is a lot of facilitation as a micro ATM, and there is a cash withdrawal which is needed. And the regulator, the income tax came out with a guideline, section 194N, proviso 3, which exempts banking correspondents. Any agent of a bank is exempt from this particular TDS proviso. But some banks read it that any agent of the bank, whereas English says any agent of a bank, which could be any bank actually. So a Shakespearean language is not warranted. Thou shalt not deducted the tax, but an example of that would help in not letting people to read between the lines or creating gray matter there. But that said, what has been built is just not for the bottom of the pyramid. And I will invoke Galib, Amitabh here. He said, "Jalaye the chirag humne didare husn ko, hame kya malum roshni hogi." So what we have built for the bottom of the pyramid is being used by a lot of NBFCs to deposit EMI for their customers. Same is being used by Amazon to do assisted commerce. Same is being used by FMCGs to procure order, and leave alone the data terabytes that we have built on it to do lending. Cash management comes naturally on this platform. So there is a lot more that can be done with right intent and deployment, and the building blocks are there.
Shekhar, your views? And you could actually expand it to the larger banking, maybe starting from, say bottom of the pyramid or inclusion. You can take it to the larger banking universe.
I think I'll go back to the objectives of government and the regulator in terms of having financial inclusion at the lowest level as the theme parameter. And they have been quite vocal about it for 50 years back, 25 years back, 10 years back. And that what has driven a lot much thought, innovation, and a regulatory framework. If you were to say Demon, I think Demon was a challenge at one side, and it was a big opportunity, I think, which came in for the entire digitization in the country. We alone, I think we could think of opening a bank account in 3 minutes thanks to Demon. I think 811, which is 8th of November, you can't forget the date because the product is named after that. So 811 happened thanks to Demon. And you were able to see a real effect of that when Corona happened, when every employee who was not able to go and meet the customers was sitting at home. The bank was able to open more than 14,000 accounts every day when the customer was at home, the employee was at home, and there was no one on the road. And still, there was an inclusion happening across the country in a very well manner. And that helps us that a lot of Bharat has happened, and Bharat has got built thanks to the regulators' push and the financial innovation which happened. Can it be more? Answer is yes, because still, I think we would have moved from X to 2X with a scope of X more, which is left. Which means that if you move from 33% to 66% and to 70%, yes, there is some part which still has to go. And from there on, I think you have to have the deepening part happening. So one is to have an account, second is to transact, and third is to have an understanding by our team. And I come back to, I think, the payment systems vision 2021, I think, which was there, where the objective was to empower every Indian with access to bouquet of e-payment options, which are safe, secure, affordable, quick, and and the whole objective is to have a less cash and less card society. And in order to make it safe, secure, accessible, affordable, it is important that it reaches all segments of the population, be it India, be it Bharat, and I generally find that the competition, cost, convenience has ensured that it becomes good, affordable for Bharat. But it has also helped us in, I think, having the entire customer experience built in, with a bit more work which need to be done for a few people who still are left.
So, linked to this question that I just asked all of you, there's another one, right, which almost invariably comes up every time we talk about regulations, which is that regulations increases your cost of compliance. At the same time, regulations often also streamline the way you operate your business. They bring down the cost of doing business in some sense, maybe not in the immediate run, but over the medium, long term, right? So would really like to hear from all of you being seasoned, business people from the financial services banking industry. What's your view? What's your take on that? Shekhar, maybe you can start and then we can go to Sohini and Naren.
I think when the teams come to me, I tell them a very simple mantra. When you are in hospital, the cost of operation looks high, only to make you much fitter, live longer, and a bit healthy. I guess a lot of compliance which we see now, or which we have seen, is with that objective. And over the period, it becomes a real part. There are places where do feel, I think, is it worth doing? Are we overdoing it? But I guess that will be a minuscule part compared to the significant part which is required to make the entire financial system work. I think as a student, when I used to ask a similar question, I was shown very simply the principles of or the purpose for which RBI has been set, where the economic efficiency and stability of the nation are important, and they would like to ensure that the payment and settlement systems are fine. So I got lessons of sanctity of payment systems, systematic risks, risk of fraud, protecting the consumer, and for the consumer, national security as a part. And as I have undergone, as I've grown and realized and undergone a couple of courses, I only realized it better that these are things which are necessary pills which needs to be taken, and most of them are necessary for building the overall financial system.
Actually, Amitabh, I would like to flip this example, and it's a wonderful example. The cost of hospitalization and operation is, I would say, customer care cost in financial services. Medical insurance is a cost of compliance. So if you take medical insurance, the hospitalization cost does not bother you. So it's how you balance it. If you have done the compliance in right time and stabilized your shop, you don't need a cost of operation, or you will not worry about it. Likewise, in banking, if you have insured compliance, your customer care cost will go down substantially. Your hassles will be better. It's ultimately a zero-sum game between the two. I would.
So Shekhar and Anand seem pretty convinced that the cost of compliance is just a temporary blip, and eventually it helps you run your business better.
Absolutely.
Sohini, Nalin, what are your views?
Yeah, see, I mean, I would say that, in the times of unprecedented growth, I think it's important that we always step back, hold ourselves, and see what is that we need to control, what has gone out of control, and maybe bring in those controls. I think compliances allow us to check ourselves and allow us to maybe course correct in case something goes, in a certain direction. And I also believe that compliance cost for one is also business opportunity for others, right? So let's hope that it is all in good sense. But I'm just saying that the cost of compliance for EMV card was an opportunity for card manufacturers to bring in shop in India, create do card manufacturing in the country. There are about 15, 20 out of them which continue to do business today. So
But Nalin, when the economics, sorry, I'm butting in, but when the economics is thin and
yeah.
maybe zero, in some cases we know that it's zero, and that's an inevitable question I'm sure you get asked in most fora.
Yeah.
So then how does it work, right? Because the cost of doing business is just an addition to the overall cost you have when there is no revenue stream.
Yeah, no, fair enough. I think compliance, like Anand has put it, compliance is the cost of certainty, cost of assurance or insurance that you have to do. I mean, imagine if you did not have economics with high with high rates of transaction, or with high consumer charges, the compliance would have still been around, right? And so I don't think it impacts, or it changes if there are different economics to transactions. Of course, it hurts more, but I think the regulator and the agencies who have put in these policies are also very cognizant of that fact, right? Because they have also opened many other gates for people to sort of utilize and work around what they can build on these payment system. For example, I was reading the recent report on digital lending, which was released by RBI, 150 pages of it. I think it's a fantastic view. They've taken a full world view of what's happening, and I think they're showing a lot of positivity around bringing that in. But but I think there is also one view they have, that just because it is technically possible just doesn't mean that you should do it, and there have to be checks and balances around it. So it's a tough balance to make. I understand, but I think it is this market with such low economics that we have this growth. Otherwise, we could be just like any other
No,
market.
no, absolutely. I think that's a very balanced take, Nalin. Totally agree with you. So, any your views quickly before we move on to the next subtopic?
Thank you, Amitabh. I couldn't agree more with my co-panelists here, and I think just picking up from what where Nalin left off, that it's not just about what is possible through technology, particularly when you're in the business of providing financial services. And under financial services, you can put the whole gamut from payments to lending to whatever else that we want to put in there. In it's really important for longer term sustainability. It's not just about what's technically possible. And in the context of cross border transactions, it is not just, you have to understand that every transaction actually needs a minimum of two regulators. So because it's originating in country A and getting paid out in country B, and it needs to comply with regulations from both sides. And at Western Union, we've really taken that as a very a long-term investment. And what that does in terms of, yes, it's costly. Compliance doesn't come cheap. So yes, it might create business opportunity for analysts and vendors and partners and different other businesses, but comes at a cost. I think the way to look at that is two ways. One, it actually goes to building long-term trust, because we can create short term blips, but really, if something's got to be sustainable, consumers need to have longer term trust. And the second place where I see investing in compliance, not thinking of compliance as a cost, but truly as an investment, helps is, and we've seen that happen at Western Union. We spent an inordinate amount of money, and in fact, I think we spend a very high percentage of our global revenues on compliance. That has helped when we opened up our platform and we said, hey, anybody, any financial institution, you could be a telco, you could be a wallet, you could be a bank, you want to plug into our system and start using our platform to now enable cross-border remittances. By the way, you don't need to bother about licensing, compliance, A, B, C, D, and not. It's not just the technology. Yes, it is difficult to be able to do global cross-border at the scale in 200 countries that we do, but beyond that comes this layer of compliance, which is the gold standard. I think that's something which really helps and creates those business opportunities. So it's like, consider it as a capital investment. It's like building roads and building highways. It's not going to, in the year, it's going to seem like costly, but there can be ways of doing it better, doing it smarter, and converting that compliance investment into business opportunities.
So let me take that and segue into cross-border, right? Cross-border as a business segment is expensive, is opaque. It's not really, I would say, it doesn't deliver a great experience in some sense. It's broken in some parts, and there doesn't appear to be any immediate fix available. Although there are a lot of startups, a lot of companies trying to fix this problem. Also, it is pretty heavy on reporting, on a whole lot of boundary conditions which are set in. So how can the cross-border problem be solved through regulations which do not compromise, let's say, the core objectives of preserving the foreign exchange reserves or what you have, or money laundering, etc., and yet create more facility, a better experience, more ease for the customers, and more transparency for them?
Yeah, I think, Amitabh, we need to go back to like what is the issue we are solving for. And when we're trying to look at that, the important thing is to make it risk-based. So yes, you need to protect against flight of capital, and you should not have people who are able to, take away large amounts of money from the country without it. But the problem with the regulations that we have right now is it's a one size fits all. So if on my birthday you were trying to send me $100 gift card or $100 gift, you would need to go through the same amount of paperwork today if you were trying to transfer $250,000 out of your account. And I think that's where we need to be able to work with regulation to say, yes, this made sense in the time period when we created this, but today there is possibility, there are these global Indians who have the same kind of requirement. And if that same thing is available in 195 to 98 other countries, India is amongst the very few countries where you need to really either go into 182 category, or you need to walk into a bank to be able to do a cross border transfer, where you cannot easily just, if you want to spend, and you can have caps, you can build categories, there can be checks and balances. But right now I think we've put these very heavy guardrails of treating every dollar, like even $100 transaction gets the same kind of treatment from a compliance perspective or a regulatory perspective that $1 million would get. Or if you wanted to invest 10 million and buy a stake in a company outside, I think you would roughly need to do really the same amount of work. So that's where we need to that's what we need to get the opaqueness out, and have more competition, make it easier, cheaper for the Indians, because otherwise it's not just about the fact that it is expensive. The value of what happens here is actually being taken away in another place. So when somebody tries to send $1,000, it's not just about what's the FX that they are going to be paying here to a bank. There is no clarity on what is the receiver going to get, which is very different from when you're sending money into India. So I think if we try to take consumer use cases, keep the customer at the center, and say, here is this new Indian who has a real requirement to send money out, how do we make it as easy and as seamless, and with the same transparency that he could get when they're sending money in, I think regulation will evolve in that direction.
Any thoughts on the cross-border piece by Shekhar, you, Nalin, Anand?
I think I'll only like to.
Yeah. Go on.
Sorry. So I'll only add one part over here. I think there has been several measures to liberalize remittances schemes to drive competition and thereby reduce costs in India. And some of the initiatives include, I think, appointing more intermediaries, money transfer agents, introducing more channels to route cross-border remittances, receipt of foreign inward remittances, directly into the bank account beneficiaries, and then MTSs, etc. And I will like to have the corridor of India-Singapore as a classic example, which will link with the faster payment systems, which is UPI and PayNow. So their UPI is PayNow, and India's UPI. The linkage is targeted, I guess, operational mid of next year, where it will enable users to for a fast payment systems for an instant low cost fund transfer, something I think what you've been hinting at, and it closely aligns with our even G20's financial inclusion priorities, which is to drive faster, cheaper, and transparent cross-border mechanism. In my mind, this is an experiment and which can get expanded further. I think it builds upon the earlier efforts, I think, which NPCI has done on the entire piece. And if this gets done, you can have trade, travel, etc. to be added, and the entire cross-border piece can have a new life. There is something more, I think, in terms of whether I think you can do that. We have seen in many cases that the transfer happens on the same day compared to what used to take a couple of days. Easily able to see whether and it is the retail amounts which are probably up to $50,000 or $1,000, where it happens 4 hours, 5 hours, 8 hours, and we have actually done it and actually do it live in terms of facilitating those payments across, especially the fees of students. If you are similarly, I think in a UK university and you want the money of probably, I think, 5,000 odd pounds happening in the evening, I think it reaches over there. And I generally say, I think a scenario can be linking payments with smart contracts on blockchain as we move forward, because as soon as the contract gets executed and instructions to pay is transmitted and payment released. So I see tech, the regulations which are there, and the security part, I think, with these 2 or 3 steps or initiatives.
I thought somebody else was trying to make a point.
Yeah,
No, I was just trying to add, to that. I think Sohini made that. Sorry, we got Shekhar back.
Please go on.
Did you lose me? I think yeah.
No.
Yeah, we lost you for a minute there, Shekhar.
Yes. Yeah, go on, Nalin.
No, I was just trying to make a point. I think I was circling back to what Sohini shared. See, from an infra point of view, cross-border specifically, I think there are now multiple options available for the market to adopt. From the erstwhile SWIFT methodology, now there are DLT platforms. Of course, we are trying to push and focus on UPI as a common standard in the corridors. Like Shekhar mentioned, if you focus on corridors and you're able to get real-time payments enabled. But I think the point goes back on the money flowing out, which is via the slightly cumbersome LRS process. But I think somewhere as market participants and less to complain about the process. I think what we're also trying to do, and we're working with the regulator to see how that process can be more automated. I think it's more about making it happen at a faster pace. The intent is not to slow it down. I'm sure nobody has that intent. So with that now addressed, hopefully. Then I think both sides of the channel should be sorted out from a timing point of view. So let's hope that can happen. So I just wanted to share that.
Sure.
So Amitabh, what I was sharing was very similar in terms of that we are able to facilitate many, especially the fee payment within 4 to 6 hours with similar efficiencies achieved on the LRS part. 4,000 pounds, 8,000 pounds, 10,000 pounds, you are able to transfer to the universities in 4 to 6 hours.
So that's a huge
improvement. Sohini would like to say something, Amitabh.
Yes,
Amitabh, I would like to add here that what we all see in cross-border remittances as the fee is the only visible part of the fee. What we miss out is on the beneficiary side, there is so much of cost attached. The fact that there are 40,000-50,000 touch points where you can go and do cash out for large platforms as well. People have to wriggle out from the rural areas into taluka to district headquarters and spend that money. I'm glad that this cross-border remittance sandbox where PayNearby is participating for inward remittance, what we have enabled, and regulator in that 1 hour call, we spoke for 15 minutes. Regulator highlighted the 45 minutes of the advantage, where when you remit cash in from there and cash out here will not be at 40,000 outlet, it will be at 6.5 lakh outlets, which are banking correspondent outlets. So it gives you not only speed, it gives you reach. Plus, instead of withdrawing the entire amount in one shot, in this sandbox, we have worked with RBI to allow him to withdraw as much as he wants at the time, at the place where he wants. So this brings in a lot of more funds in the banking system, digitizing, making it visible, helping him earn money, and simultaneously letting the agent not stock up so much of cash every time. So there
Sure.
are a lot of pieces to be solved on this side as well, and which is what this sandbox initiatives we are happy about. We're working with Western Union and team as well to see if we can propel that inward flow and smoothen out the
Sure.
withdrawals here in India.
No, those are all, I think, really, really excellent points. And, obviously, those inform us about the changes that have already been made in the cross-border segment. Probably there is a lot more to be done, but we are headed in the right direction. Let me ask you something a little away from this topic. So India today has multiple regulators in the financial services domain. I mean, there is IRDA for insurance, there is SEBI for securities and mutual funds. Of course, we have the Reserve Bank of India, and then you've got TRAI. So we have quite a few and very strong regulators, right? At times, there are processes which apply to each of the domains that they oversee and regulate. And the same customer would typically be an insurance customer as well, could be investing in mutual funds, would be banking, would be using a mobile phone. Do you think there is a need in India, and this goes to Nalin first, and if anyone wants to add anything to the response he gives, do you think there is a need for better coordination, some sort of a unified approach between these regulators? I mean, account aggregation was probably the first time they came together, but there were other opportunities where this could happen. So what's your take on that, Nalin? Could this create more efficiency in the system and better experience for the customers?
Uh, Tough to answer, Amitabh, but yeah, maybe we need a regulator sandbox just to make sure that every regulator is able to come together. And I think it also answers the point you asked earlier in the conversation, that what is that is needed from a compliance and regulations point of view before and after. I think this is one part where the impact of one regulation on something that others are doing or other industries are doing is important to be assessed. While I think RBI does a fantastic job of bringing everybody together, it's very consultative, to be honest. But I'm saying it may have an impact on a certain industry or a certain segment, which may not be under its preview. So how do we create a regulator sandbox? I think is key here.
A
In
common
this,
platform for regulators
yeah,
to sort of
yeah.
collaborate or whatever, right? Any other views on this? Otherwise, we'll come to, I mean, we've got just about a couple of minutes left, and I sort of wanted to sum up the discussion. It's been a really, really engaging discussion, and I wanted to sort of sum it up through a question to all of you. How does one leverage regulatory changes rather than being wary or apprehensive of regulatory changes? How do you use technology, foresight, creative thinking, maybe a little bit, right? How do regulations help you accelerate and build and achieve more rather than fall back and be left out?
I think
Question is to all four of you, and
early
30
participatory
seconds,
engagement,
30 seconds each.
early participatory engagement is the way forward. Nothing beats that, Amitabh.
Okay, great. Nalin, Shekhar, Sohini.
Uh, I think it's important that when we are designing for compliances, we're keeping certain parameters to take care of deviations, to take care of certain exceptions that may come along. See, not everybody will walk with the same pace. Many times we end up designing systems that follows the regulation to the T, but there are always some open spaces, some gray areas which get left out. So I think it's important to have that thought process to be able to take care of those open areas. I think by making sure that you're fully compliant as well. So I think that's important.
Sohini.
Yeah, I would say just, I think understanding and aligning on the objectives, because clearly it's not like, it's not like regulator is at cross purpose with the industry, right? So I think aligning of objectives, and then hopefully getting the opportunity and using the opportunity to create dialogue if there is a difference of opinion. I think it's important for getting our voice heard with the regulator as well, even if you at that point of time are not able to see the picture in the same manner at that point.
Brilliant. Shekhar.
I generally term it in two. One is hackathons are important even now with regulators, and there you are able to have a discussion, understand the objectives, even I think spell out pros and cons well, so that the discussion can be much healthier, much better. Many people fear that the discussion may not result into the right results. Our experience and across has been that anything which is new, anything which is innovative, I think have a discussion. Hackathon format, if it can become formalized, I think is a good way to engage. Sandbox is a very good way in which I think regulator has accepted the request and is experimenting with 6, 8, 9 options, which is, it is one of the ways they're going to devise regulations.
Great. With that, I would like to bring this discussion to a close. It's been really, really engaging, insightful, very interesting. Thanks to all of you. I really enjoyed, this discussion. I hope our audiences did too. Back to Karan.
Thank you so much. Thank you, everyone. That was a certainly robust discussion on keeping up with the regulations. And of course, for all of you who are designing for and around the several regulations that we get in the country, I'm sure it was of great value to all of you. The personal highlight for me was being part of Mr. Bajaj's trip to the airport, which just goes to show that nobody misses FTX for anything. Thank you guys so much for giving us your valuable time, and for everybody still attending FTX. We have a fantastic discussion up next on designing platforms for skills with a bunch of leading CTOs. So that's all for this discussion, and see you in the next one. Bye-bye.